Ray Dalio's urgent message cuts through complacency. Most people have no idea what is coming. Unseen catastrophe looms. As a financial luminary, Dalio's ominous warning carries weight. His insights, forged through decades of navigating economic ebbs and flows, demand attention. With uncertainty shrouding the horizon, his words resonate as a call to action. Whether economic shifts, technological revolutions, or unforeseen challenges, Dalio's assertion rings true. Preparation is paramount. Ignoring the currents of change invites peril. In this pivotal moment, heeding is crucial. For those who grasp the magnitude of the unseen can adapt, survive, and thrive in the face of what lies ahead. Ray Dalio's last warning to you. In recent times, Dalio has been raising a warning flag, one that carries a sense of urgency. His message, most people have no idea what is coming, resonates with both seasoned investors and those new to the financial landscape. But what exactly is Dalio warning us about? And why is his perspective so significant? Dalio's concern revolves around the concept of a paradigm shift. We are on the brink of a significant transformation in the global economic and financial landscape. For years, conventional wisdom has guided our understanding of markets, interest rates, and central bank policies. However, these norms are evolving rapidly, and many are ill-prepared to adapt. Dalio's perspective gains weight when we consider historical precedents. Throughout history, economies and financial systems have undergone seismic shifts that reshaped wealth distribution, power dynamics, and global markets. From the Great Depression to the 2008 financial crisis, these transformations have left lasting impacts on society. Dalio believes we are now on the cusp of another such transformation, driven by factors such as technological advancements, changing demographics, and unprecedented levels of debt. Countries engage in various types of conflicts, and there are 5 main categories: economic or trade wars, technology battles, capital disputes, geopolitical tensions, and military confrontations. These conflicts usually escalate from the earlier forms to the more serious ones. Just before an actual military conflict starts, there's often a fierce economic struggle where both sides try to weaken each other. This can involve freezing or taking control of assets, blocking access to financial markets, and imposing embargoes or blockades. Historical examples include sanctions, like what the United States often does, and recent actions like the United States stopping China from getting computer chips, and Russia stopping Europe's natural gas supply. Another indicator of upcoming military conflicts is a significant increase in military spending. For instance, China is planning substantial boosts in its military budget, and to a lesser extent, similar trends are seen in Europe and the US. These moves serve as early warnings of a potential military confrontation on the horizon. Before we dive deeper, make sure to hit that like button and subscribe to this channel for more incredible life-changing content. Now, let's move on. 3 monumental events that are happening. Ray Dalio established Bridgewater Associates back in 1975, and by 2005, he had grown it into one of the world's largest hedge funds. Fast forward to 2022, and his hedge fund has an impressive 107 clients, managing a whopping $235.5 billion in assets. Dalio, through his research and insights, points out 3 significant events occurring in our lifetimes that are quite unprecedented based on his historical observations. Firstly, governments and central banks are creating a massive amount of both currency and debt. This is a big deal because it hasn't happened to such an extent before in our lifetimes. The sheer scale of money and debt being generated raises questions about the impact on economies and financial systems. Secondly, there's a lot of internal disagreement in the United States about how taxes are used and the differing values people hold. This internal conflict is noteworthy due to its intensity and widespread nature. It's a situation that's influencing how the government operates and how policies are made. The third thing Dalio highlights is the changing global order. He points out that China and Russia are now competing with the United States in ways that haven't been seen in modern history, stretching back about 80 years. This shift in power dynamics has significant implications for the world's geopolitical landscape. Taking these three monumental events into consideration, Dalio became motivated to dive into the historical patterns of market rises and declines, economic shifts, and even the trajectories of entire countries over the past 500 years. He delved into the history of China's dynasties, spanning the past 2,100 years. All of this research and understanding helps him piece together a more comprehensive picture of how these unprecedented events might shape our future. When a new set of rules is established to shape how the world works, it creates a fresh order where things are different. During this time, there's usually a period of peace and prosperity. People become accustomed to this good situation, and they start believing that this prosperity will continue. To make the most of this, they borrow money more and more, hoping to make even more money. But eventually, this leads to a problem, like a balloon that gets too full and bursts. As people become richer, the gap between the very rich and the others gets bigger. At some point, this debt balloon bursts. This means there's a lot of trouble, like printing more money and arguments inside the country. This might even lead to a big change where the wealth is shared differently. This can happen in a calm way or a violent way. Usually, when this happens, the strongest country that won the last big fight, both in terms of money and power, is not as strong anymore. Other countries that did well during the good times became more powerful. Because things aren't going well and countries disagree with each other, some kind of war might break out. From these problems, like too much debt, problems within the country, problems in the world order, new things happen. There might be big changes like revolutions or wars. And from these changes, some people or countries do better and some don't. Then the ones who did well come together to create new ways of doing things, both within their own countries and in the world as a whole. Ray Dalio on inflation. The massive money printing worldwide since 2020 led to excessive money chasing limited goods, triggering inflation. Economics is like math. More money and higher prices due to excess cash. The U.S. budget deficit and Federal Reserve's money creation partnered for a high 8.3% inflation rate, or 12% considering core inflation. Printing money beyond supply generates inflation, unrelated to supply chain issues. This erodes currency value, impacting savings, bonds, and paychecks. Governments prefer inflation as taxing up front isn't popular. People get checks but face higher prices later, a tax on savings, bonds, and earnings, reducing their worth. Also, if the S&P 500 index drops 20% year to date, while inflation is up 8%, your portfolio's true decrease is 28%. The Federal Reserve's present approach involves raising interest rates and reducing available money, creating a dual strain in markets: inflation and limited credit, with rising debt costs due to higher rates. Inflation drives folks to invest rather than hold cash as its value drops, potentially causing ever-growing inflation. In the 1970s and 80s, people went to extremes preparing for inflation. The Federal Reserve overreacted by raising rates excessively, eventually breaking inflation. This cycle is repeating now. China rivals the U.S. in trade, economics, and military strength. The outcome of their disputes shapes future global power dynamics. Ukraine's conflict forces choices for trade alliances, sanctions, and shaping the world ahead. Countries with strong education systems, producing high-earning and productive citizens, will likely thrive. Education levels often correlate with national success. Nations upholding the rule of law and order attract investment and immigration, ensuring success. Conversely, countries grappling with crime and corruption face long-term struggles. Corruption negatively impacts growth, with a minus 52% correlation between corruption and growth rate over a decade. Russia, rich in commodities, suffers due to corruption. Ray Dalio predicts a 33% chance of stagflation in 2022, meaning inflation during a recession. With a 33% plus probability of a U.S. civil war, given citizens' divisions, even relocating to align politically. Dalio perceives over 33% chance that the Ukraine conflict could escalate into World War III, driven by Russia's desire for victory. Ray Dalio's advice: how to prepare for what's coming. With his insights into historical patterns and current trades, Dalio offers valuable advice on how individuals, investors, and countries can brace themselves for the challenges and opportunities ahead. Learn about investing. Take time to learn about investing and managing your money. Get educated in these areas. This involves understanding how money and markets function, getting to know different investment choices, and grasping the pros and cons of each. Begin saving from an early age. Saving money early on is very important for your future. Yet, keeping all your money as cash is not a good idea. Transform your savings into investments. Dalio suggests over a longer time, stocks, bonds, and real estate will likely bring higher returns compared to keeping money as cash. Create a diversified portfolio. Consider putting your money into things that become more valuable over time. Following Dalio's advice, focus on investing in things that tend to increase in value as time goes on. This means not just relying on keeping your money as cash, but also spreading it out among different investment options. In the past, things like stocks and real estate have generally gained value, giving investors good returns. However, remember that investing comes with risks, and how things performed before doesn't guarantee future results. If you find this video informative, like and subscribe to this channel for more educational content. Let's continue. It's smart to think long-term when investing rather than trying to guess when the market will change. When you invest, it's wise to have a variety of things in your portfolio. These could include stocks, pieces of companies, bonds, kind of like loans to governments or businesses, and real estate, property and land. Having a mix like this helps reduce the chance of losing a lot if one type of investment doesn't do well. Dalio also suggests spreading investments across gold and businesses. This way, if things like rising prices, inflation, or a tough economic situation, stagflation, happen, your different investments can help protect your money. Learn the market's long-term cycles. When it comes to investing, having a long-term outlook can make a significant difference in achieving your financial goals. One of the key principles emphasized by experts like Ray Dalio is the importance of understanding the market's long-term cycles. Straying from that balanced mix isn't advisable, as market timing is tricky, even for professionals, explains Dalio. However, knowing how to navigate cycles is essential. Understand when to buy amid widespread selling and when to sell during periods of high demand. With ample time until retirement, individuals can capitalize on deep bear markets by increasing investments and decreasing contributions towards the end of bull market cycles. Those facing a stock market crash stand to gain and should consider adopting a more optimistic stance during significant market declines, as it enhances their purchasing ability. As we navigate through uncharted waters, Dalio's insights prompt us to approach our financial decisions with vigilance and foresight. By understanding the historical patterns, recognizing the potential impacts of factors like inflation and shifting power dynamics, and embracing a long-term perspective, we can position ourselves to weather challenges and capitalize on opportunities. If you enjoyed this video, don't forget to like, share, and subscribe to this channel for more growth content. Thanks for watching.